then we say, well, these are the areas that this particular state's focusing in or that particular state's focusing in. So you can get down to the point where you say, okay, how am I going to apply that in my particular role? And to your point, the expectation is that we're going to give you the best we got. And I think it's really current and more often than not accurate, but you get to apply it.
Welcome to Triangle Tweener Talks, a weekly podcast by builders for builders where we explore the startup journey from the idea to the exit and all the lessons in between with an exclusive focus on founders from the Triangle region of North Carolina. Now here's your host, serial founder and general partner of the Triangle Tweener Fund, Scot Wingo.
Welcome to Triangle Tweener Talks. In this episode, I was very excited to have a chance to talk to Mark Flickinger. He is the COO and General Partner at BIP Ventures. If you're familiar with Atlanta, there's this somewhat famous neighborhood called Buckhead. BIP stands for Buckhead Investment Partners. Learn something every day. You're probably asking yourself, why do we have an Atlanta VC on a Triangle-focused podcast? That's a really good question. Each year around this time, BIP publishes their comprehensive State of Startups in the Southeast report. It's one of the best sources of data about investing in the Southeast that I find. It's very clean. It's sourced from PitchBook and a bunch of other areas, so it is very clean data. Unlike Carta, it's comprehensive, and there's also a lot of reasons to love this data. This is a bit unusual for the podcast, so whether you're watching or listening, it may be helpful for you to, if you're at a computer, if not, you can do this later, but go over to bipventures.vc, and then over under resources at the very bottom of that pop-up menu, you will find a link that says State of Startups. The 2025 edition is out, which is very exciting. So this is being done right when it's out. And in the conversation, Mark is going to tell us a little bit about his background, and then the origin story and what BIP does. And then we're going to jump headfirst into the 2025 State of Startups in the Southeast report. There's a ton of great data on here, and we go through a lot of the headlines. You're going to really enjoy hearing how our region compares to other regions, how our state compares, just interesting trends for founders and then also investors. So there's a little bit of something in this one for everybody. If you have it open, we go from the top to the bottom, so it's kind of a good tour of the report, and then from there you can go on your own self-guided journey. Enjoy the conversation with Mark. This new data is amazing, and thanks to our friends at BIP Ventures for publishing this incredibly helpful data every year. We really appreciate it. It's great for the Triangle Tweener Fund, so we especially appreciate it. But it's also really good for our state and region here in the Southeast, and helps illustrate that we have a lot going on, and we are sometimes overlooked by a lot of people. So hopefully this is one of the many steps we're taking to fix that. First, a huge thank you to our gold sponsors. Today, we are featuring EisnerAmper. EisnerAmper helps tech companies from startups to public enterprises navigate growth with tailored accounting, tax, advisory, and outsourcing solutions. They have deep industry knowledge, support over 2,100 technology companies as well as investors. We'd also like to recognize our silver sponsors. Today, we are featuring Automated Consulting Group. ACG cuts through AI hype for executives, offering hands-on workshops, fractional AI leadership, and deployment-ready AI solutions. Thank you again to all of our sponsors for supporting Triangle Tweener Talks and the entire Triangle startup community. It takes an ecosystem to build a thriving community, and sponsors like these are very valuable, and they contribute their time and also help sponsor things like the Triangle Tweener Talks and Triangle Tweener Times. Thank you. Hey, everybody. Welcome back to Tweener Talks. We're excited to have Mark Flickinger, and he is with BIP Ventures, where he is the general partner and COO. Mark, welcome to Triangle Tweener Talks.
Thanks for having me, Scott. Really looking forward to the discussion. Appreciate you having me being here.
Absolutely. And we're violating one of our first big things is we usually have folks here from the Triangle, and you're from so far away. You're from the very distant city of Atlanta. So one of our fellow Southeasterners.
Well, I appreciate you having me. I did get my graduate degree from UNC Chapel Hill. So I at least was there for some period of time.
We will claim you as most people that pass through the triangle move back. So at some point, we're going to get you back.
I loved it there. I met my wife there and we both love it. So we may be back.
Good. Now, was she a Tar Heel as well, or do you have a house divided?
She was also a Tar Heel. We met in business school.
I will not ask you about Bill Belichick. I know that's painful for my Tar Heel friends.
We got to give that experiment a couple more years, in my opinion. But
I don't know if they're going to be patient or not. College football is not a patient.
We could spend the whole day talking about college football and what's going on in that market. But
that is thankfully not our podcast topic. So the reason I wanted to have you on, a non-triangleite is you guys dropped this really good data, and it's called the State of Startups in the Southeast, and you just came out with the 2025 edition. And I've been a huge fan of the data. I think that's how your folks found me, because I'm always tweeting about it and LinkedIn about it, and have been a big fan of what you guys do here. Let's start back at you. So we know you're a GP and COO, and we know you went to school here. Fill in the middle. Like what happened in between there? How did you get to be in the venture industry and be in Atlanta?
Yeah, I mean, thanks for the question. I always had a knack for not necessarily being the entrepreneur that would come up with an idea and start my own thing, but I loved building things that hadn't been built before. And oftentimes that was partnering with someone that was doing that. And so operational background, mechanical engineer, business degree. But even in large companies when I was younger, I always was working in an area that was new, right? It sort of hadn't been built before we were tackling a problem. And so I first moved to Atlanta out of business school and worked at a startup. Similar vein, startup had just started and was kind of employee 5 or 6, and helped that company scale and ultimately exit. And then was fortunate enough to land here at BIP back in 2015. So part of the gray hairs, I guess, are from the past 10 years. But it's been a lot of fun to land here at the ecosystem, the Southeast ecosystem I'm talking about. At the time it was 10 years ago, and really see what's developed since then in somewhat of I'll call it a collegial way. You know, people in the Southeast all have something to say about investing in the Southeast and starting a company in the Southeast. I think that's one of the reasons that we launched this report back in 2017, was to really start telling that Southeast story. And you have always been a big fan, so we appreciate all the support that you've provided along the way.
Absolutely. And then can you say what kind of space was that startup you joined in? Is that something we would know, like one of the big, like i2 or one of those?
No, it wasn't a huge company. We were we called ourselves a product performance consulting firm. And so we would get between large retailers like your Home Depots, AutoZones, Costco, et cetera, Lowe's, and would help them ensure that the product that they put on the shelf actually lived up to the strategy for the shelf. Right. So Home Depot, well documented as good, better, best, but they rotate the buyers and the vendors are coming out with new stuff every year. And it's really hard to say, are we truly stacking the shelves in good, better, best strategy? And so we were a firm that helped tease that out and help them make more informed decisions that ultimately positively impact the consumer.
Yeah, we'll have to have a beer or coffee sometime and talk about the fun world of retail. That's one of my other passion areas. So we share a lot there.
It's a different world.
Yeah. Now tell me a little origin of the, let's back up. What is BIP Ventures? You joined in 2015. How old's the firm? And, where do you guys plant your flag as far as the venture sweet spot?
Yeah. So Mark Buffington founded the firm back in the O's. So to call it 2006 was our first fund. It was a blind pool, kind of a pledge fund environment. And we continue to raise funds every 3 years since then. But our sweet spot is really first institutional capital. We love finding companies and partnering with them. Call it Series A, businesses that have 1 million, maybe to 5 million of annual recurring revenue. And then we're putting in that Series A check and maybe $1 to $5 million of capital. We do it mostly in B2B software and tech-enabled service businesses, with a focus on that of areas where we have expertise across our investment team. And we really like to be kind of multi-stage. So we may find companies there at Series A, but as these companies warrant additional capital, I say they hold their end of the bargain, we'll hold up ours. We'll continue to concentrate in our winners and invest more and more capital into those businesses. I think that's been an interesting dynamic. It's very different than what you'd see at some of these other innovation hubs where they just pile a bunch of capital into an idea and in some ways make it a binary bet. It either works or it doesn't work, and they move on to the next company. I think building a company, I mean, you've done it, it takes time to solve the problems and figure out. And I think a more rational way, at least in our opinion, to do that is to smaller amounts of capital at the appropriate stages. And then you follow on as you figure out things like product market fit, make sure your product lives up to the promise, and customers continue to come back. And so we've started in Atlanta. When I got here in 2015, almost all of our portfolio was in Atlanta and the greater Atlanta area. That expanded to the Southeast and then to the Midwest. And now, based on our areas of expertise, healthcare tech being one of them, we now have companies all over the country, not really in those innovation hubs like Silicon Valley, Boston, New York, but really everywhere else, these kind of secondary and tertiary innovation hubs. We're just finding great companies that warrant capital based on the solution that they're providing.
Cool. And then, so you want to see a company kind of bootstrap may not be the right word, but like, kind of figure out their way to north of $1 million. And then you want to be the first kind of institutional check-in so that you can, and then that helps them manage dilution too, because they haven't been diluted in a pre-seed seed kind of a fashion.
Correct. Yeah. We'll do some seed checks. About 5% of the capital we deploy is into seed. Those for us, just for definitions, are around on average $250K, maybe up to $500K checks. But there has to be a reason for that. We are not geared towards like being able to serve many seed-based companies, and so we'll do some of it. But to your point, we'd like to see them, figure out the traction from there, and then we can really put the full efforts of our firm to partner with them to go forward. We have both the investment team and what we call a performance engineering team. That team is experienced C-suite executives on our team that have done it before. They go to market motions, ICP, financial metrics, talent acquisition, all the things that are needed for us to sort of meet these companies where they are and help them kind of scale farther and faster with us as a partner. To your comment about dilution, I agree. We've done some of the math on that, but I think it both increases the probability of success for an entrepreneur because you have these checkpoints along the way and you're not always trying to, I got valued at $100 million, but I only have $5 million of revenue. If I don't get there by the time the money runs out, it becomes this binary bet. I think the kind of stepstone along the way at the end, I think it not only increases ownership for the entrepreneur at the end because you're able to raise along the way higher valuations, but I think it increases the probability of success. You have these checkpoints along the way to make sure that you're solving the problems that need to be solved without this sort of guillotine coming down on top of you. Like when the cash runs out, I don't have any other options.
And I like that you're not just capital. There's a set of resources there that you can draw on to kind of forklift and help whenever needed.
Yeah, we refer to ourselves as active investors, and that has some negative connotations in the public market. I think, from us, from the private market, if you're an entrepreneur that really is uniquely positioned to capture some opportunity in front of you, why not learn from people that have done it many times before to avoid the pothole, step over the tripwire, whatever the case may be. You don't scale too fast in sales just because you had a bunch of people sign up. Like to kind of go through those motions. I think it's been a huge benefit for our portfolio companies, and because of that, obviously, it's a benefit to the LPs as well.
Very cool. Awesome. Well, let's. So I'm reading the tea leaves, and I see someone that joined in 2015. The state of startups in Southeast was 2017. You're an operator. Operators love data. Is this your brainchild / baby, or did you inherit this somewhere along? What was the origin story for someone putting together this data set?
I was there at the beginning. Mark and I were talking about what was going on in the Southeast, and really no one was telling that story back in 2017. And a lot positive has happened since then, 2017 to 2025, where we are today. He's like, we need to tell a story. He's like, you need to write a report. You need to do state of startups. And so the first iteration was sort of the two of us sitting in a conference room talking about it. And we walked out of there and said, let's get it launched, and let's get it launched by our big LP investor conference, which is a little over 30 days away. So the first one was, sort of the necessities, the mother of invention. We sort of built this thing pretty quickly, picked 9 states in the Southeast for us to look at, and kind of looked at a data set of about 5.5 years. because that's what we had at the time. We partner with PitchBook to do the report, as well as some other external sources, and then of course our own internal knowledge. And we launched it, and it was well received. No one really had talked about what was going on, and since then we've evolved to kind of three. It kind of has the same pieces and parts. We have sort of the macro trends of the Southeast, so not macro, but the Southeast trends. There's usually 3 or 4 of those. We cover states individually, what's going on in the states, and then we kind of have lists, right? These lists of most active investors, most active sectors that people are investing in, exits, unicorns. And it's really neat to see how that evolves through time. But the origin story was really just, we're telling a story to each other. We should tell it more broadly. And I think that not only would benefit us, but it would benefit the Southeast as an ecosystem overall.
Yeah, 10 years ago, I had a similar idea to start this list of companies in the triangle that were at a certain level, and it kind of has gotten a life of its own. And here I am doing a podcast. Unintended consequences of starting these things. The another thing I love about it is you guys do, a McKinsey level fanciness of the presentation of the graphics. So it's got like lots of cool scroll-X, and there's a little switch there where you can be in founder mode or investor mode, which I kind of live in both of those worlds. So I always like that, being able to flip the script and see both sides of it. And then you've got like really nice interactive maps. My memory is that's like the last 2 or 3 years that it always hasn't been as fancy. I think I vaguely remember a PDF version, and then like somewhere it made this leap into. Then I'm just in my head, I'm imagining you hired some amazing associate that would just like totally elevated this thing. What's the story on that?
Yeah, I give that credit to our SVP of content, Rochelle Kuramoto.
Well, you can tell Rochelle she's doing an amazing job.
Yeah, she was the one that said the idea. She said, there's a better way for us to tell the story than this sort of static PDF, which was admittedly my idea way back when. You highlight sort of one of the things we really try and do with that report is recognizing it to have an ecosystem, it requires multiple entrants and participants. And the big ones easily are founders and investors. And, if you're an investor, you say, well, why would I care about the Southeast? I'm on the fundraising trail often, and it's less now than it was 10 years ago, but I've had a lot of institutional investors say, why would I invest in the Southeast? And the same thing for founders. There was a period of time when all the things about the Southeast, like, yeah, maybe you could start it there, but you can't really scale it there and be successful. And I think that story has changed. And as we have these macroeconomic environments that are impacting things are cyclical. There's lots of money, there's no money, there's good exits, there's no exits, et cetera. Knowing what's going on in the Southeast from either the founder seat or the investor seat is key. And so being able to bring that to a interactive, dynamic web page where people can kind of choose their path and really dive into the data has been a nice upgrade, and certainly has been well received by the audience.
Yeah, absolutely. And then I found the data. So Carta does a good job of publishing their data, but what drives me crazy about it, I'm taking a little sidebar here, just came to me, is most companies in the triangle don't use Carta because it's expensive, right? And I think companies in the Southeast are more frugal. So the first thing you do when you start a company here is you don't go spend, they have the free version, but it's not really free. You don't spend a couple $1,000s on just like a thing that could live in a spreadsheet. So I dislike that data because it oddly excludes us because our region just doesn't really, participate in the underlying technology, which doesn't seem like a way to do data. Whereas by using the PitchBook data, you're getting a much broader. There's no like you have to be using this software to be in our data set or some kind of thing like that, which I like about it.
Yeah, I think that's right. I mean, it's one of the biggest challenges every year is sifting through the data, and we're at somewhat of the, I don't want to say the whim, but how PitchBook slices and dices their data. They're constantly innovating and updating as well. And so, this through line over the past 9 years of reports, the terminology and the way things are worded, we try and articulate that at the back of every report. But to your point, there's so much going on in the Southeast that wouldn't show up on a Carta or wouldn't show up in some of the big national reports. So they'll do a national report on venture. It doesn't really get what's going on in our ecosystem. And, PitchBook
We're always underreported. It's annoying.
Yeah.
No one but us cares, but you're fixing it. So I that's another thing I really appreciate is like a voice that says, no, this is the right data. At least there's like a source of truth that we can kind of point to and say, this is why the Carta data is wrong or whatever other data. So we're going to jump into the report, but for those listening or watching, I just want to say we're going to put the link in the show notes, but all you have to do is go to bipventures.vc and then resources, and then at the bottom of that menu, it says state of startups, and that'll take you right to the interactive view of things. So bipventures.vc, resources, state of startups. So that's where you can find it if you want to kind of follow along with our discussion. Okay, so you've talked about the methodology. So you're looking at 8 years of data. So a lot of the data set starts at 2018, and then goes to 2025. I also find it's interesting that we're talking about this in October, turning into November here shortly, and you're already talking about 2025. This is another thing I like about the report. It is extremely current because a lot of 2025 data will come out, maybe in April, and by then you're like so deep into 26 to the next year, you've kind of like you don't really care about the past year. So to do that though, you do a little bit of a forecast. So tell us a little bit about like why did you decide to do that, and how do you come up with that forecast, just so we can kind of orient on that.
Yeah, we cut the data as of June 30, and then we literally work on the report daily from July 1st to when we launch it, typically in October. And we do that for the exact reason that markets are dynamic. They change rapidly. And what happened, I was doing a fundraise once, and I was approached December 31st. They said, everyone's coming back to market. We can't take you. We don't do any new managers. And then January 1st hit, and they said, the market's cold. We're not doing any investing. I'm like, what happened? Like, I literally talked to you a week ago. It was the exact opposite story, right? And so I think for those trying to operate in that type of environment, the most up-to-date data that we can put out there, recognizing that, by the time we publish it 3 months later, maybe we're not 100% accurate, but we're certainly much more current than waiting until 2026. And so, from a forecast perspective, it's where appropriate. You look a little bit at what happens on a year-to-year basis. There's some seasonality, but some ways the most simplistic way to say is there's not that much seasonality, and so we'll just double kind of what we're seeing here, and that's mostly held true. Occasionally, there's outliers where there's a really large deal that's gotten done in a state that doesn't historically have those, and if you just double it, that doesn't make any sense. And so, we look at each one from a state-to-state perspective, but the Southeast as a whole. With recognizing there's a small bit of seasonality, it's relatively straightforward for us to say this is the trend we're on for 2025, and directionally that tells people kind of what's going on in that market and that environment. And I think from there you can tease out how to operate in that particular space.
Cool. So it's a choice over, temporal currency. I was going to say currency, which sounds like money. Time, being current in the moment versus 100% accuracy. So yeah, and in startups, I think that's appropriate, right? Because we're throwing dartboards, and we just kind of need to get near the bullseye. We don't have to 100% hit it. So yeah, I'm super biased because I love it so much, but that's one of the things I appreciate is you're giving me some really good real time data that's helpful.
And then you can apply it, right? Not sorry to interrupt, but you can apply and say, okay, does that work for the space that I'm operating in? And sometimes that space is really, really niche and narrow, and sometimes it's more broad, but it's probably not the whole Southeast. And so I think giving people what's going on in some levels at a macro, like national level, and then in counter to that, or often congruent with that, is the Southeast. Then we say, well, these are the areas that this particular state's focusing in, or that particular state's focusing in. So you can get down to the point where you say, okay, how am I going to apply that in my particular role? And to your point, the expectation is that we're going to give you the best we got. And I think it's really current and more often than not accurate, but you get to apply it, right? Then you get to take that information and apply it in a way that's best suited for you and whether you're an investor, founder, specific role, et cetera.
Let's take it as, I like how you guys have laid it out. So we'll just follow that format. We'll kind of peel the onion. So let's start at the Southeast, and then we'll go into some state level stuff. And then, you're on a North Carolina based kind of fund program here. So then I want to spend some time in North Carolina if you don't mind. We love our friends in Atlanta, but we have a lot going on here too.
You do have a lot going on.
yeah. It's been busy. Yep. So you've been doing this for a while, 8 years. What stood out about? Give us a theme this year. Like if you were going to give it a little theme for the Southeast, what happened? And yeah, and feel free to tie it across years. There's been some interesting. We all know like zero interest rate was kind of a crazy time, and then we had COVID. We had a lot going on there. Like frame that up for us. What are you seeing in the data?
Yeah, I think the first piece was go right where you just said, right? There's this massive influx of capital, COVID, zero interest rate, et cetera, is a massive bump in the data. If you go, it's like the first chart, right? The deal count goes up, the money goes up, and it comes back down again. And I think it's easy for us to read headlines and say, the world is cratering and ventures awful, et cetera. But if you actually look at the data, what's going on, and you just draw a straight line from the beginning of our data set to where we are today, that line is up, right? It's up in terms of essentially dollars deployed and deals being done. And so, yes, we kind of, I don't want to say lost our way, but we went through a very unique event that had the kind of culmination of both zero interest rate as well as what was going on with COVID. And those numbers broke all the records in the world that we had in the Southeast in terms of dollars, capital, et cetera. But we're still on an upward trend. I think the Southeast continues to mature, and it's maturing in a way that should make it more and more attractive for both investor and founder. I think once you get through that, that's obviously very high level and topical, but I think what's going on underneath that is really interesting in terms of the opportunity for both founder and investor that's going on. What we're seeing is AI dominates. It dominates in the world, but what we're seeing in the data from the Southeast perspective is less deals are getting done than there were last year, but more dollars are being deployed. Right? So capital is concentrating in more businesses. That means that more mature businesses are capturing the dollars that are being deployed. So if you just look 1 year to the next year, you say, wow, we're funding what's already in our portfolio. We're valuing traction, revenue, business fundamentals, et cetera. Therefore, that's bad for the earlier stage businesses. I think if you actually look later in the report and we say, what's the balance in the Southeast of, call it early, mid, and late stage companies, just easy buckets. We were about a third at the beginning of our data set. 2018, 2019, about a third of the dollars that went in for each of those. We were forced, well, all the capital showed up, to distort those numbers where it kind of moved the out of balance in terms of what we were investing in. And now we're in 2025, we're back to a third, right? And so, yes, we're doing more later stage deals than we've done in the previous couple of years. I think it's actually a healthier ecosystem where we're investing in early stage companies, we're investing in mid stage companies, and we're investing in late stage companies. That late stage bucket has always been kind of the knock of the Southeast. Like, you can't do a Series D round in the Southeast because there's not enough capital here. That continues to mature. And I think the fact that we've been on this journey, this up and down journey, we're back to this balance between the three, shows that, hey, this is a great state to start a company, right? I now have some capacity for capital throughout the life cycle of my business, but also to keep a company, right? You don't have to move your company to the West Coast or to New York or Boston in order for it to be. And I think as takeaways from the report, it takes time for that to play out. That was always sort of the hunch when we got through 22, 23, and even last year in 24. But to see the next year of that data set continue along that trend, I think is a real positive outcome from a Southeast perspective.
I said we'd do the onions, and I'm going to jump in. I'm going to violate my own thing. Do you track how much investments are from outside the Southeast? Because what we see in the triangle is those rounds get done, but they're not led by Southeast firms. Is that?
I would say indirectly. The way that we do the report are deals that are done for companies that are headquartered in the Southeast, right? And so that what you're talking about, outside capital from outside the AC, it ebbs and flows much more on a macroeconomic level than it does what's going on in the Southeast. But you can look at the reports on a state-by-state basis, or at the end we have the list of the Southeast in general, and you can see where it's the most active, and that most active is based on number of deals, not dollars, but number of deals that are being done. And you can see in different states kind of who's showing up on the list, right? Like if you're from outside of the Southeast or outside of your state and you don't recognize them, often those are internal.
So that's by company. location, not investor location.
Correct. Yeah.
Okay.
So the
All
whole
right.
report is based on company location, not investor location.
Because it's so high correlated, I couldn't tell.
They are correlated, but you can see in some spaces where I'll use Andreessen because they're in the report. Andreessen Horowitz has done a bunch of deals in the Southeast, and that's a name where people that a handful of years ago they wouldn't have done the report. But there's other names as well that kind of, I'll call them name brand, whether that's good or bad, but people that would recognize the names of external capital that comes into the Southeast, they recognize there's good companies to invest in here. I think that's good for the ecosystem, but I also want founders to know that's not the only source of capital, right? There's a lot of capital here in the Southeast, and that continues to grow, whether it's what you're doing with your fund in North Carolina, or it's incubators, accelerators, government, seed stage checks, venture stage checks, later stage checks. There's just way more activity in both local and external than there's ever been before. And I think that makes it a much healthier ecosystem for people to start and scale a business.
Yeah, putting on my founder hat, I found that list the most helpful because, you know, I've gone out for decades to Silicon Valley to raise money and never been successful at it because I always believed they said they would invest here, but they really wouldn't. Like if I ever got to a term sheet, there was like this kind of awkward thing where they're like, would you move to Silicon Valley? I'm like, no. So I felt like I was getting rug pulled a little bit because like the earlier conversations, like, absolutely, we love investing in. So you actually are looking at like, well, who's actually writing checks in the area, right?
In the Southeast, right?
In the Southeast. So they will actually write a check outside of Silicon Valley, and that helps me prioritize who I'm pitching, and a lot of new names show up on there all the time that I haven't seen. So as a founder, it's super helpful to kind of think about what are these, and a lot of them do end up being in the Southeast that I may not know about as well. So that's on the founder side. I've always marked that as like one of the more helpful parts of the report is the list of investors.
Great, thank you.
Yeah. So staying at the Southeast level, what are some of the things that you would point out to founders? So, you got this bell curve, the downside of that bell curve kind of coming off of ZERP and the 2022 to 23 was probably the biggest downslope. We've reverted to the mean, which is good. And now it's upsloping slightly. Does that mean as a founder, it's gotten easier to raise capital? Is that what the data kind of tells you?
I was
easier relative to the other years.
I think easier relative. I always say that there's never enough capital for the number of ideas that are out there. There's never enough capital, and so yes, in kind of in aggregate, maybe it's easier, but I think it's always a difficult environment to raise capital. You have to convince someone of your dream and what you're doing. I think from a founder's perspective, what's nice about right now is that I would say that the business fundamentals never went out of style, but certainly they were less important when there was money flying around everywhere. But I think for businesses that are scaling, that have good business fundamentals, it's a known problem, it's a definable problem. The market that they're going into knows about that problem. They know that they can't solve it with existing solutions. You're starting to see some traction with the product that they bring. And then there's some unit economics that make sense. Like they don't make sense today, but you can see how this will become a scalable business and when the time is right, perhaps profitable. I think from a founder's perspective, it's a higher bar for them to show all of those pieces and parts than it was in kind of zero interest environment. But that shouldn't be a challenge that you would shy away from, right? If you're building a business and you're trying to solve a problem that you're going to do good for society, whatever the case may be, you should be able to do it in a business model that makes sense for the people that are running that business. And I think what's nice about this environment is that, yes, there's more capital. Deals are slightly down, but I think that's somewhat a nature of the environment we're in. I don't think that will stay forever. That we're in it's a cyclical component that we operate in, and so I think that will change. But founders that can go out and say, here's the problem I'm solving, here's the solution and how it's unique and defensible, here's the traction I'm getting, these people have re-upped with my solution, and here's the unit economics of that. And that's a rational story that I think businesses that are doing that are getting funded. And you could say, well, those companies are Series B, but you can still have that vision and a seed stage company and sort of articulate sort of what's going on in the value it provide and how it makes sense for everybody. I think the bar has been raised for that. I think the other thing where the bar has been raised is, we haven't talked about it yet, but I feel like we have to, is AI. From an artificial intelligence perspective, our AI infrastructure is not the Southeast. We touch on this report. That's not what we do. That is now a multi-billion-dollar game, and probably in some respects a bubble. So there are going to be winners out there. There'll be more than one. But building the LLMs and all the infrastructure to do that, that's not the game that we're playing. It's not really the game the Southeast is playing. But applied AI is critical. You sort of have these haves and have-nots. It's like 50% of the deals that are being done are either AI infrastructure or applied AI, meaning we're taking AI and it's part of the company. Doesn't necessarily have to be part of your solution that you're offering to the market, but it's making your company more efficient in some way, shape, or form, whether it's marketing, sales, customer success, et cetera. And then there are other people that it's a key component to their actual solution, like they put AI in the product that they're selling into the market. And I think from a founder's perspective, you need to have that in your toolbox. It needs to be part of the overall organization. I think the days of launching as a AI company, like something.ai, that worked for a while where people would get slightly higher valuations. But now it's more like, okay, what's your plan? What's your applied AI plan as part of your solution? I think from a founder's perspective, if you can articulate kind of what we just talked about in terms of the value that you're offering to the market and how AI is going to make you more efficient and effective at doing what you're planning to go do, it's kind of table stakes now, right? You can't just have an idea on a napkin and expect to be able to get funded. And I think that's healthy. I mean, that's a healthy environment for both founders and investors alike to not only use the new tools, but also the business fundamentals need to make sense as well.
One of the things, having done this for a long arc of time, is the unit economics used to come up in Series B, and now it comes up in pre-seed. They're like, what are you expecting them to be? Like, I don't have any customers, but you're.
That might be a little early.
Well, they want to know that you're thinking about it, is what I think, is kind of how I process that.
That's what I was saying. You need to have a vision of like, this is how it's going to happen. And then we can argue over whether it will happen or not, but in time will tell. And you have some time along the way, particularly in the kind of tranched approach that we talked about earlier, to figure it out right along the way. But you need, to your point, you need to be thinking about it. You can't just say, volume, and then we're going to win. And,
yeah, it's made it harder as a founder, because it used to be you only had to think about product in the early days and then figure out this other stuff. And now you have to kind of like have it all planned out and dialed in, and at least have a coherent discussion about it. But that's a part of the game. We always have to up on our side to get the dollars. You then kind of, staying at the Southeast level, you go into some industry stuff, and I was pleased to see healthcare is so big. I think that always surprises people about the Southeast. But then number one is information technology, which I would just kind of rebrand as software, kinds of things. And anything surprising there that stood out for you? You show the long arc. It's the chart in there is like the 8-year arc. Anything kind of changing intra-year that you've seen in the data?
Well, I think, just to touch at the high level, we've Southeast has always been a strong the information technology space, which includes SaaS and software solutions, and IT has different meanings, so it's important to know the definition inside this particular report. That's always been a strong suit. The Southeast has not been historically in aggregate strong B2C businesses. It's mostly been B2B, tech-enabled service, software businesses, and that I think continues to hold true. And particularly this year, people kind of you go with what you know kind of space in the areas we've had a lot of success. So I think IT is in some ways had momentum faster than some of the other markets have. Healthcare has been our second one, and you think of what's going on in North Carolina, the Triangle area. Nashville, Atlanta does a lot in building these healthcare tech solutions. Healthcare kind of always shows up often as number two on a state-by-state basis, but certainly in aggregate from the Southeast. And I think there are still plenty of opportunities to solve problems in the healthcare space, and in ways to do that in a way where you're increasing access to care, you're increasing quality of care, you're increasing velocity. And so, it's fun to see those things. The two that were, the one that I would say is sort of a new or surprising is that B2C, there's a B2B component to it that's outside of what we just talked about from a software perspective. But B2B and B2C are growing. I think they continue to have increase. They're kind of their own version, but they're building on their own. And I think that's great, right? The diversification of the Southeast in general is you have more and more successful founders. Those founders want to start another business. Those investors have had success. You have this sort of momentum building, and it's fun to see. We're not monolithic. We're not just B2B SaaS businesses anymore. We're B2B SaaS plus healthcare plus. We're starting to get some real traction, even in the B2C space. I think it just shows the maturation of the overall market.
I was a little surprised not to see, where does defense tech, is that like B2B in this context?
I don't remember exactly which one that fits in. It's in the back of the report, I
Okay,
imagine.
I'll go check it out. Yeah.
But I don't, off the top of my head, don't remember which particular bucket that falls in. Most likely either the infrastructure technology, depending how it's categorized.
Because I hear about all these, I kind of keep an eye on Florida because I know a lot of folks there, and they have a lot. The Space Coast is getting really into the defense tech kind of world, and a lot going on down there.
The other one that just to keep an eye on, and this doesn't show up in the report just because we're doing aggregate, is energy. I mean, energy in general is a massive area of investment. It's not a space that we do well, but there's little pockets of energy in the Southeast, and certainly nationally with AI, just to use that consumes tremendous amounts of energy. And so there's some correlation there between sort of energy, in some ways defense tech, but that it's hard to hone in on that. Not to say that the Space Coast, defense, et cetera, isn't real, but when you roll everything all up, it's not yet big enough to pop out at the kind of trends of the Southeast yet.
And then last one, you have some really good, and this is always super helpful for founders. You have some good data on valuations and kind of round sizes and things, which is, it's kind of like, what is the straight down the fairway looking like? So you also compare it to the U.S. index, which is also helpful to kind of see how our region's doing. So and I also love charts that pack in a lot of data. So all your charts at least have two axes, which is really, really, really cool. It takes a while to kind of parse them because I'm always like, what's the, okay, yes. So you do this kind of comparison of capital invested to post money valuation, and you look at the correlation there, and then you compare it to the U.S. and the overall U.S. And it's interesting where it rose through 21 and 22, and then it came way down in 23 and 24, and then in 25 it's coming up nicely, which is tracking the national piece. So is that a reflection of that mix change into kind of a third, and we're getting some more late stage, kind of the companies are maturing, and that's kind of what's going on in there? Or is it like valuations are going up?
I think it's a little bit of both. But personally, right? I think that's an interesting one. I always tell me that one being a mechanical engineer and like looking at the data and stuff. That one's an illustration that shows a point. You wouldn't necessarily always graph those two things together, but to your point, they correlate. They correlate along the way, and then suddenly they like invert. We've never seen that before since we've been running the data on this report. And I think that is so we're talking about mean post-money valuations and then the capital invested, right? So they're related, but they're not directly correlated. But the mean post-money valuation has gone up, and it's a kind of rising faster than capital invested has. I think that shows the maturation of the space, right? So people are staying in the space and they're investing more business longer. I think it also shows this reversion back to the third I talked about earlier, where we're doing more later stage companies. In the national piece, it's being pulled up a lot by these big, it's an average, right? So it's being pulled up a lot by these big AI deals, these multi-billion-dollar deals that will pull that up. And you can see that actually happened about a year earlier in the national graph than it did in the Southeast. The Southeast typically, we covered this in last year's report, but the Southeast typically lags by a couple of quarters, and that's a good thing. Normally you say you lag, that's a bad thing. It lags in a good thing. What it does is it allows us to have less of these violent swings up and down and up and down, where it's more rational because you see what's coming and people adjust their behavior accordingly. But I think it's a combination of more mature businesses being here, more maturity of the ecosystem so we can do more mature, like higher valuation, post-money valuation businesses, and that kind of rebalancing to a third. I think all of those are good for both investors and founders. And, when you can say, if I'm buying, I don't want the post-money valuation to be higher. If I'm selling, I do. that should be a rational balance between the two, right? We should be fair to all parties, and I think it only goes up when there's competition, right? Like the supply demand balanced, and so I think it's healthy for the ecosystem, and some of it's what's happening independent of the rest of the kind of big economic trends just here in the Southeast, but some of it also is just what's happening in the market.
Okay, let's dig into the state level. So I immediately go in and compare. We're a competitive bunch, so I immediately kind of compare how we're doing in North Carolina versus other states in the Southeast, because I think that's a really good comp versus, it's always frustrating to look at us versus Silicon Valley. We're never going to catch that runaway train. Uh,
Norm,
I do wish you had Texas though. I always like to keep an eye on Austin, what they're doing. I always kind of compare us to them, but I understand they're not in the Southeast as you're defining it. But yeah. And I noticed we're number two over this period of 8 years, which is pretty impressive because we didn't start at number two. So if we looked at it over time, I think we've done a lot of catching up here pretty quickly in the last 3 or 4 years. And then the largest one, and I think this always would surprise people because I think most people would guess Georgia because of the Atlanta, and then maybe Tennessee because of Nashville. Nashville's actually a bit smaller than the Triangle, and Atlanta's bigger than the Triangle. But Florida, and you just kind of forget how populous Florida is. There's been a lot of, relocations to Florida during COVID. But they by far had the most dollars invested. So, we're at 40 billion, they're at 40 billion, and North Carolina is at 26. So, yeah. So what's going on in Florida?
Yeah, Florida's an interesting market. There are so many. There's so many. I mean, I could say that about a bunch of things. But we love Florida. Our neighbors here to the south. There's a lot of different areas where Florida is doing well. Right? So if you think about innovation hubs in Florida, there are many. And if you think of Georgia, there's mostly one. In Atlanta, in North Carolina has certainly more than one. But in Florida, the biggest areas are Miami, which, to your comment earlier, a lot of people flocked to Miami. It got a ton of capital deployed into it during the kind of COVID and zero interest rate era. And that's still in the report, right? So there's billions of dollars that was deployed kind of 2020 through 2022 into Florida. But the main areas are Miami and Tampa are the two biggest areas for Florida. And you say, well, wow, there's all these other areas that you didn't even mention. And that's true. There's a bunch of other areas like Orlando and Jacksonville and out on the coast. And yeah. And so there's just a bunch of different places where innovation is happening in the state of Florida. And to your point, it's very populous. There's a lot of money. There's a lot of universities. There's a lot of companies that are started there. And so it's sunny and warm. There's no taxes there for income taxes. So there's a lot of reasons that you would aggregate the pieces and parts that were required to build a good business in Florida. And I think they've been able to attract some of these multi-billion-dollar deals just in one deal. They're knocking off a couple $1 billion capital invested. Not happening so much in 25, but back in 2020 through 2022. So I think, that we may not catch Florida just because of all the different areas where it's able to attract capital, companies, et cetera. I think North Carolina, to your point, has really grown up, and it's been really fairly steady. And I mean that in a good way, right? If a state is relying on a couple of deals to make or break each year, you see a lot of volatility back and forth year to year in terms of number of deals, dollars deployed. North Carolina has a lot going on. It doesn't rely on just one particular industry. It has a lot of people that fund it. It has multiple areas or pockets where innovation is happening around the cities and the coast. And so it's fun to see, the big ones are as there with many states, but they're in information technology, SaaS business, and then also, to your point, healthcare tech, based on what's going there. But it's a resilient environment that even with the ups and downs that we've seen over the past 5+ years, it continues to track as kind of the number 2 state in terms of activity that's happening across both deals and dollars deployed.
Anything else you noticed in the state level data that you want to highlight?
I think all of these, in terms of the acting funding funds, all of these have kind of the third and fourth one to keep an eye on. And I think, North Carolina is no different. There's some B2C going on there, not necessarily in the top 3 yet, but I think there's stuff going on there. I mean, Epic Games has been a big part of the ecosystem in terms of dollars deployed.
And Pendo, those kind of two, really helped us in the last over that 8-year period.
Yeah, but that's not necessarily, you don't say, oh, well, the only thing North Carolina does is gaming. There's a bunch of things that are going on in North Carolina. I think that allows for it to have sort of the resilience aspect of the ecosystem.
And then my favorite thing to go look at, this is where I always go first, is I hit the little North Carolina button. Then I go look at venture capital funds. And number one with a bullet is Triangle Tweener Fund. And we're only 3 years old. So, yeah, we've made a lot of progress.
Yeah, you guys have done a lot of deals. It's always fun for us to look at those as well. And particularly, always keep an eye out for you. But, given what you're doing in the number of deals you guys are putting together to fund these businesses at those early stages, is really exciting. I think as you're aptly named, there's a gap in the market. There's a need for what you guys are doing, what you and your group is doing to fund these businesses to get them to the place where they're showing up and getting ready for the more mature rounds, if you will. So well done. It's always fun to see where you guys are.
Thank you. And this kind of speaks to the data because you've nailed it. Like, I think it's right at 161, so that's perfect over that period. So we're number one at 161, then Hatteras at 42. I always forget because they're our biotech friends. They do a little bit of healthcare, but and I know you have biotech in healthcare, which is fine. We don't do anything that requires FDA approval because it's such a different beast. I'm sure you guys don't do either as a fund. Yeah, it's like, whoa, that's complicated and scary. Yeah.
When a founder comes to you, we always say that a fast no is a good answer. And so that's like the first question we ask, like, is what you're providing the market requiring that? Not us. Go talk to some other people.
But Hatteras likes that. So they're number two. Idea Fund at 30, our friends there. Co-Founders Capital. This was almost a tie, but co-founders, if they'd done one more deal, they would have done it. So 29. What is SOSV? I'm not familiar with that one.
I'm not sure. That was in the report at one point, but I wouldn't be on this podcast and speak eloquently about it. So.
And then this is at the company level, right? So these are North Carolina companies.
Those are correct. The way it's written.
So if Hatteras did a deal in New York, it would not be in this number.
In the North Carolina data. Yeah. So it wouldn't be in the data. It wouldn't be in our data set in general because it's in New York. But
it's in PitchBook, but yeah, I got it. Cool. So I'm going to go do this, but I'm pretty sure we have done more deals than all the other non-biotech companies in the Triangle. So. It's good to see our friends at Primordial, Bull City at 20, and then the Front Porch guys, which is mostly fund of funds, but they do some directs as well. So it's interesting to see them in there at 19. Then you have the Angels. We got Venture South, Carolina Angel Network, the CAF, and R2B Capital Associates. This is where I always learn new things, like the Winston-Salem Partners Roundtable Fund. I've always heard there's a fund there. I didn't know what to call it. So this is like really helpful. Like if I ever wanted to go find out who those people are, now I can. And then, whoa, I'm in there individually. That's strange. Okay.
I'm not sure how that happened, Scott, but.
Yep. There you go. PitchBook. Who knew? And then you've got incubators. So our friends at NC Idea with a whopping 192 with their grants that they give out. So we'll catch them eventually at Tweener Fund, but it's going to take another year.
Hey, you're on pace.
Yeah. And then you talk about kind of the people in the ecosystem. So you've got the NCS, NSF, the Biotech Center, NC State. So it's really good capture of the, all the different layers of the ecosystem. And then you have it by state. I won't go by that. I don't want to use all our time to talk about other states. Let's talk about cities. Like, you're there in the heart of Atlanta. You obviously probably take a little slice of this data and kind of look at the city level, I imagine, for your own needs. What's going on in Atlanta? What's kind of for a while you guys were big on cybersecurity. You had a lot of kind of folks servicing the Home Depots and Cokes of the world. What else is going on in Atlanta these days?
Yeah, I mean, I mentioned already it's the most active region in Georgia. And so in many ways, the way the greater Atlanta area goes is kind of how the state of Georgia goes. Not that there isn't activity elsewhere, but it's fairly stable. So I think it's similar to what we just talked about for North Carolina perspective. Always has been strong from the infrastructure technology piece of SaaS. Always been strong historically in the healthcare tech space as well. And I think there's been a bunch of wins in Georgia recently. We haven't had a lot of unicorns, kind of newly minted unicorns. So those are privately held businesses that are valued at $1 billion over the past couple of years. And I think that's a sort of a general trend. But we have had these businesses that are multi-billion-dollar business and exits. I think that always, allows for the next wave, right? So a bunch of the talent that was in those companies that then moves on to their next thing, whether they start their own thing or they jump into another company. And so that kind of momentum that starts to build has been fun to see here in Atlanta over the past 10 years, since I've been here, but certainly over the past couple of years as we've had some of those big exits. And I think we'll see some cyber, we'll still continue to see fintech. There's a kind of the credit card alley where a lot of these deals are happening. Probably a little bit of insurtech, that's happening. But I think that the success we've had as a B2B town in those kind of information technology space and healthcare tech, I expect to continue to see. But in a regional state level, it's similar to what we just talked about from a North Carolina perspective, where some of that volatility is dampened because of the broad success we've had across multiple industries as opposed to just one or two. And then when you have success, more and more people are paying attention. That allows more companies to start, more deals to come, more capital being invested. And so I'm really bullish and excited about kind of where Atlanta is headed over the next couple of years.
Got it. Cool. Well, we're at the top of the hour. I don't want to make you late for your next appointment. What any last words you want to go before we part ways?
Well, I appreciate the time. This has been a lot of fun to talk about it. This is a report that, as you mentioned, I was there at the beginning, but it always is a labor of love in terms of just really seeing what the Southeast is. And I think there's a lot of insightful information in there for both investors and founders alike. And so I would encourage everyone to kind of go through the report and dig through it to see what resonates with you. I know it impacts us when we go through that data and we really see and we step away from our day-to-day activity, say what trends are happening. It allows us just to be more insightful in the way we approach the market and how we operate within it. And so I appreciate the time talking about it. And I would encourage people to go through it and figure out what you can learn that you could then apply to make you better in your day-to-day world.
Yeah. Thanks for joining us, Mark. And thanks for taking the time to come on. And let's make this an annual thing. So I'll see you in a year if I don't see you in between. And definitely want to tee you up for 2026. So I'll put that on I'll plant a seed that we want to get you back on when the report comes out to talk about it so we can talk about what's going on. And thank you to you and the team for putting this together. I think it is a huge resource. I know these things, they can sometimes be a thankless. Like every time I put out the tweener list, the first feedback I get is people that are angry that I did something wrong. So it can be kind of, I know it's probably like a thankless, and then people over time, over a longer arc of time, the good stuff comes in, but it's like angel investing. You get punched in the face first. You're like, why did I do this? But we appreciate it. So, thanks for doing this to you and the team, and thanks for coming on and sharing your insights.
Oh, you're welcome. And thank you very much. I look forward to 2026.
All right. We'll see you in a year.
Thanks, Scott. Take care.
For more Tweener content, check out the Triangle Tweener Time Substack at tweener.substack.com. For more Tweener content, check out tweenertimes.com. Thanks for listening, and we'll see you again soon on Triangle Tweener Talks.